So hello guys, welcome to the next video. We will talk about how to manage your running trades. Okay, so as you can see, price is moving in an uptrend here, creating series of higher highs and higher lows. So the expectation order flow is bullish, right? We are expecting the top of this demand zone, and after the top of this demand zone, we are expecting a change of character, and after the continuation of the whole bullish order flow. Okay, as you can see, price created this demand zone right here with all the three criteria, and I will just tell all the three criteria again because it's really important part. I just want you to memorize it. I just want you to learn it, and I just want to make sure you learn all the three criteria about the demand zone. So okay, price created this demand zone right here because it broke structure to the upside with inefficient movement and swept some liquidity from this region, let's say. So we have a valid demand zone. Okay, so the red lines are the 15-minute structure, also this leg too, and the pullback is the 1-minute structure. So we're expecting the top of this demand zone, and after the top of this demand zone, we are expecting the continuation of the whole order flow, which is bullish. Price tapped this demand zone, swept some liquidity from this region, let's say, and after a liquidity sweep and the higher time frame demand mitigation, it changed character to the upside and broke through several supply zones. So as you can see, we have a supply zone right here. Price just broke through that supply zone. We have a supply zone right here. Price broke through this supply zone too, and change character on this region. Okay, catch up. So we have a change of character and the supply breaks, and we are expecting the continuation of the whole bullish order flow from this demand zone that has been created, because if a zone breaks, an opposite side zone will be automatically formed. That's another rule too, as you may know. Okay, so price change character, tapped us into the trade because we did set an order limit on this order block, on this demand zone. And let's say we are targeting the next unmitigated supply, which could be this one. Okay, so how do we actually manage the trade after we get tagged in? So we are in the trade right now, just tagged in, and if price starts to move up and breaks through the last structural high, which is this one, so it creates a break of structure to the upside, we will put our stop loss into break even. So as you can see, price broke structure to the upside. We will place our stop loss on the break-even level. So this level, I will just mark it with a red line. So the red is the stop loss level. Okay, let's say price creates a pullback. And after the pullback, if it hits the break-even level, we will tag out from the trade with no profit and no loss. If price respects, for example, this demand zone, because we have a demand zone right here, sorry, I will just draw a demand zone right here. Let's say price respects this demand zone and reverses on it. After the next break of structure, so the break of this structural high, we will put our stop loss, BUS long. So we will put our stop loss below the next structural low, the strong low. So as you know, this is the strong low. If a structural high, a weak high breaks, we will put our stop loss below the less strong low. And this method goes on and on again. If this high breaks, let's say price respects demand zone right here somewhere, breaks the high. So this high has been broken, this supply zone has been broken. I will mark a break of structure here to the upside. We will put our stop loss below the next strong low. So this is a strong low because it broke the last weak high. And this goes on and on again. If price creates pullback and breaks structure to the upside here, we will put a stop loss below the next strong low. And this goes on and on again. Actually, I found it working really well. I hit way more trailing stop loss and TP than just normal stop loss. Okay, what is trailing stop loss? Trailing stop loss is this stop loss that we put underneath the weak low, strong low or strong high in a short trend. So if you are managing your stop loss, that will be your trailing stop loss. And if price breaks through this level, your trading stop loss will be hit and you will be taken out from the trade in profit, right? Okay, for me, this is the best way to maximize the profit from each trade. So I'm just using this one. I'm not taking any partials. That's not my way of trading. I like trading my stop loss. Okay, let's see some live examples for this. Okay, so that's a live example on how to manage the trades. So as you can see, price is moving in a downtrend here, creating series of lower lows and lower highs. Actually, the last break of structure happened here from this supply zone. This supply zone caused an inefficient movement that swept liquidity from this region as you can see, triple bottoms, this supply zone swapped the triple bottoms, broke structure here, inefficient movement. So we have a really valid supply zone right here. Okay. Price actually came back up. Sorry, let me just zoom in so you will see it better. So price came back up to mitigate this supply zone, and after the mitigation, it reversed on this supply zone. But after the reversal, it created a flip zone, a 50-minute flip zone. So as you can see, this demand zone created huge inefficient push to the upside that changed character here and broke to the supply zone. And actually, it swapped liquidity from this region. So as you can see, there's a liquidity trend line. Stop loss is just below this line. So it has this demand zone has all the three criteria again. So this is a really valid demand zone. Okay, price reached its high point here. Actually, it tapped into some sort of supply zone, reversed, and started to form series of lower lows and lower highs. Okay, price tapped into this demand zone, and on the 1 minute, you will see that there was a good entry opportunity. And let's say we entered in a trade. But first, let's mark our higher time frame target, which will be this supply zone right here, because this supply zone started the whole inefficient movement. As you can see, from this supply zone started the inefficient movement and the change of character, because this was the last demand zone, and price change character here on this line, and the whole change of character and the inefficient movement and the liquidity strip from this region happened from this supply zone. Okay, so let's switch to the 1 minute, and you will see that I will just extend the target point after this supply zone. Okay, so you will see that we have a really great entry opportunity, and I will just replay the price here. Okay, sorry, I will just adjust this. So as you can see, price created series of lower lows and lower highs, created the last low, this supply zone. After it broke structure to the upside, changed character to the upside, this demand zone changed character, this demand zone swapped liquidity from this region. So price came back down to mitigate this demand zone, and let's say we entered in a trade here. So we are tagged into the trade right now. Okay, as you can see, we have this last strong high here. I mean a weak high, sorry. We have this last weak high here. If price breaks through this last weak high, we will put our stop loss into break even. So on this level, I will just extend this position. So let's play price forward. As you can see, price broke through this last structural weak high. Here's a break of structure to the upside, and we will manage our stop loss into this level. How do I actually mark it? I will mark it with this. Okay, so our stop loss is on this level in break even. If price creates a pullback and respects this demand zone and creates another break of structure to the upside, we will put our stop loss into the next strong low. Let's see what happens. So as you can see, a pullback has started, and actually price created a new low because it created a pullback and small break of structure to the upside here, but this is our new low. But in this case, I wouldn't set my stop loss below this level because this one could be liquidity for this demand zone. So I will just keep my stop loss here. This isn't a real break of structure, it's just a liquidity built up. Okay, let's see what happens next. Price created a pullback, reacted on the demand zone. As you can see, reaction, if this high breaks, I will put my stop loss below this level. Okay, let's see what happens. Okay, that high has been broken. As you can see, here's a break of structure to the upside. I will just mark it with BOS long. Okay, and I will place my stop loss below this level. So our stop loss is on this level. As you can see, we are logged in almost 3% profit. So 3% profit is already logged in. We can't lose that. Let's see what happens next. Price creates a pullback again, as you can see. Pullback, 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 pullback. Liquidity. And price broke structure to the upside again. As you can see, here's a break of structure to the upside. Also, it happened here. So I will just place my stop loss below this. But considering the liquidity, so as you can see, we have liquidity here in this region. Triple bottoms or double bottoms, first, second, or third bottom. We can keep our stop loss on this level because if the liquidity sweep happens, our stop loss will keep us in the trade because something will hold the price here and our stop loss will be protected. But if we place our stop loss below these equal lows, we have a high chance that will be swept out. So let's just keep our stop loss here and wait for another structure break. As you can see, pullback happens and break of structure to the upside again here. And in this case, I will just place my stop loss below this low or this low. So in this case, we will have maybe 5% lagged in. Yes, 5% profit lagged in already. So let's see what happens next. If price breaks structure to the upside again after the pullback, we will play. Yeah, break of structure happened again here. So here's another break of structure. I will just place my stop loss here. But as I said, we can consider liquidity. As you can see, we have liquidity again here, and we can just keep our stop loss on this line again. So we won't be part of the liquidity with our stop loss. If price breaks another structure to the upside, I will just place my stop loss below these lows. Let's see what happens. Pullback happened and another break of structure happened. So I will just place my stop loss below this line. Okay, let's see what happens. Another pullback, another break of structure to the upside. We can do the same. We can keep our stop loss here if we are afraid from the liquidity, but I see no liquidity here. There's no double bottoms. This could be just a small pullback. So I'm placing my stop loss below this level. And if my stop loss hits, we will hit maybe 8% profit or 7%. Yeah, 8% profit. So we have a trailing stop of 8% profit. Let's see what happens. Price creates a new high, another pullback, another break of structure to the upside. Actually, I will just keep my stop loss on this region because this could be liquidity for this demand zone. So I will just keep my stop loss here. Okay, let's see what happens next. Yeah, small pullback. And as you can see, if I would have placed my stop loss in this region, it would have been stopped out because price is sweeping this liquidity right now. That's why I kept my stop loss here. Let's see what happens. As you can see, price swept all of the stop loss levels. And if this breaks structure to the upside here, I will place my stop loss below this level. Let's see what happens. It broke structure to the upside. And as you can see, I will just draw a line here. So this is our stop loss level. And it perfectly kept us in the trade. So a break of structure happened here to the upside. I will just place my stop loss below this low now. So our stop loss level on this region. Okay, let's see what happens. Break of structure to the upside here. Pullback started. Huge pullback. If this high breaks, I will place my stop loss below the next strong low. Let's see what happens. Okay, as you can see, a low has been created, a strong low again. This strong low broke the structure to the upside. So here's a break of structure. I will just place my stop loss below this level. And if that stop loss hits, I will be in almost 9% profit. So that's really good. Let's see if another pullback happens. Actually, it's building up liquidity again in this region. I think it will go straight up to the TP. Yeah, straight up TP hit. And actually, that's how you manage your stop losses. The same concept goes on for the short trades. So let's say change of character happened here. Judge down after a higher time frame supply mitigation. So we have a change of character. Let's say you entered on a freshly formed supply zone here. You entered in a short position on this supply zone. And you're targeting the next unmitigated higher time frame demand zone. Okay, if this low breaks, this one, you will put your stop loss into break even. So break of structure here, stop loss into break even. Break of structure here, stop loss here. Break of structure here, stop loss here. So the same concept goes on for the short opportunities. Okay, see you in the next one, guys.